Hello traders, this is Alla Peters, founder of Alpha Wave Trader method that based on pure price, indicator free price for entry and Fibonacci for exits. First of all, I would like to remind you, always recognize the risks involved in trading and review in detail disclaimers that United States government requires. Webinar will be recorded and will be posted on the website. So if you need more time to review the disclaimers, I highly encourage you to review the recorded webinar that will be posted in our video library and will be posted in multiple sections on the website. So, in this webinar, I will be sharing with you briefly what Alpha Wave Trader method is all about for about 15, maximum 20 minutes. After that, I will be answering your questions about the instrument of your choice, such as futures, forex, and major stocks. And always remember to put the time frame next to the instrument. For example, Apple weekly, S&P hourly, oil monthly. That's what I need to see. If you will forget to put the time next to it, I will pick any time frame that's available at that time on my chart. At the end of the webinar as well, I will post the invitation to my trading room. In the trading room, I demonstrate the method on futures, derivatives of S&P, and derivatives of oil. So let's start, shall we? Please save all the posts until the end of the presentation, and I look forward to answering your questions. What makes Alpha Wave Trader so different? I'm incredibly proud of what I developed and what I continue working on daily because I love what I do. I believe in pure price and I believe in Fibonacci. That's all I believe in trading, and I believe in the power of the trader who makes prudent, reasonable decisions when he places trades based on knowledge of the market structure without any indicators. I spent years and I spent fortune on software and indicators only to come to conclusion they all are delayed. Every single indicator imitates price after the fact. Therefore, I went to work and developed my own method that involves price for entry and Fibonacci for exits. Alpha Wave Trader method involves no software of any kind, no indicator of any kind. It applies to any platform, pure price for entry, Fibonacci for exits. Here is picture-perfect example why I come to such conclusion that it is the best way to trade, which most traders come to conclusion eventually. Indicators look at how the market behaved after the fact. Every single indicator that had ever been developed will never tell you what will happen next, only what happened already. Every single indicator based on mathematical formula that's developed and applied to certain sequence, using most of the time variation of multiple indicators. No indicator on the planet will ever tell you how the markets will behave in the future. Indicators are way too late to plot. Example, S&P. Price spelled out last week where reversal zone will be. Reversal zone was reached on September 3rd. Price spelled out at the inception of the bullish trend at the end of August where the reversal will be met and where price will collapse. This is S&P hourly, and these are Alpha Wave Trader proprietary Fibonacci levels. I do not use standard Fibonacci levels, and the reason why I love what I do is because I see this sequence repeating each and every time. Let's take a look what S&P had done today. We came to the markets and the price was here. And I said, ouch, bad idea. I cannot touch S&P anywhere near here because I know that sellers will step in with vengeance at any moment. Because price told me that long time ago. That's what our students know, what not to enter into. This is one of the most critical and essential components of trading, when not to trade. And that's exactly what happened. Half an hour after market open, sellers stepped in. They reached the end of the minor trend, the most important level in the market structure, identified in Alpha Wave Trader method as the end of the minor trend. And this is where price struggled for 3 hours. Guess what I've done? As trading room open, we've taken long while price was pushing back up. Why not? After the trading room close, price finally blasted through these levels. And if you know the rules, you had an opportunity to continue with the short collapse. It's going to become extremely interesting and extremely choppy. It's not going to be very inspiring night. I'm going to be monitoring S&P incredibly clearly at these levels because we are in very narrow range and currently buyers and sellers are completely equal. At this particular moment, sellers are domineering this market, and I expect to see sellers step in at any moment, which we may witness while we're still in this webinar. But once again, all the levels are preset by price. John, I asked all the questions after the presentation. At the inception of the trend, the formula I developed that identifies these levels is what applied. And this is what's spelled out by the price far in advance. No indicator will ever tell you that. As you may know, I had been gone on vacation for almost 3 weeks, and when I came back in town, it was quite interesting interaction today. I said, oh my God, Euro finally reached, I was right here, 133, because I've been spelling out since 2013 that Euro heading to 2900. My student says, Ala, you're on the wrong data feed. You're with futures broker. It wasn't the trading room. Euro reached all of your targets. I haven't looked on this chart since early August. I have been projecting this level since 2013. It is all the exact same formula. And pay attention to the importance of the end of the minor trend, Euro daily. Euro struggled to break through this level since June. When it came to this level in July, it danced for 3 days, only to find support at decision point 2. Decision point 2 is respected by the price for entire months from the end of June until the end of August. And here it is. How predictable can price be? Telling you since 2013 where Euro is heading to. And if you listen to the audio testimonies from our amazing alphas, you would see that students trading anything from ETFs to Forex to stocks to options, price moves in exact same sequence, doesn't matter what you trade, and tells you far in advance where trend exhaustion, trend reversals, and profit-taking levels will be. So let's briefly talk about the indicators. This is one of the most popular indicators in the market. This is what I used to use. Moving averages, crossovers. Fabulous, spectacular, amazing, marvelous in trending markets. If you stuck in ranging markets, if you stuck in corrections, ouch, which means what? 40% of the time indicator would not work. For example, this is a ranging market on S&P 5 range. By the time you enter short, you're supposed to take long and vice versa. It becomes ultimate butchery. What's important to know? Simply look on the chart and know where's correction, where's reversal, where's inception. This is the alphabet of the market. This is all you need. When you read a book, you look at the page that you read, you look at the letters. This is the alphabet of the market that tells you strength, weakness, reversal, inception, profit-taking levels. It is not random, and it doesn't matter to me what time frame I trade. It doesn't matter what instrument. And this is what I demonstrate the method on. The trading room is day trading room. The smallest time frame I trade is 5 range S&P and 8 range on oil. Bigger the time frame, bigger the stops, bigger the targets. So about 20% of the students who come to me had been in the markets forever. This is a chart of one of the students who, after 20 years of trading, signed up for private mentoring. When I logged into his computer, I said, oh my God, how can you learn anything about the markets? What the heck has happened to the price? Can anybody see where the price is? How many indicators are on this chart? After 9, I lost the count. How many more indicators can a trader put on the chart to wait for a confirmation? The price is hidden. The price is nowhere to be found. The most important component is being completely ignored. It doesn't matter if you spend 2 years with indicators or 20. You just keep investing in buying something, not improving your knowledge of the market, not taking control of your trading. And that's an example 20 years later. Quite a few of my students been trading that long, believe it or not. And the most marvelous thing and the most beautiful study, if you listen to Janice's testimony, I think she should be speaker at all the trading conventions. Janice was a beginner trader who never, ever, ever, ever took any course, who never, ever, ever, ever used any indicators. She already doubled her account. She has no issues. She has no indicator addictions. She's doing just fine, and she thinks trading is easy. She's an amazing lady, retiree in a beautiful state of Florida, who should be a model and a speaker for every trader, showing you the power of the trader, the power of the knowledge, the power of discipline, and the power of having no preconceived notions. So this is all you will ever see. Pure price with Fibonacci levels. And it doesn't matter what time frame, it doesn't matter what instrument. Here's an example of oil monthly. All the levels posted on oil monthly since 2009. Oil spelled out where the end of the minor trend will be, decision point 1. Decision point 1 respected multiple times. Every time buyers step in, every time buyers step in, each and every time. Currently oil is heading to all the way until about 86. That's where it's gonna get pretty interesting. 86 is extremely important level on oil monthly. Do not confuse oil monthly if you are a day trader. This is position trading. It involves many weeks, many months, potentially could be years. It is not oil hourly, where oil today had shown us something extremely interesting. This was the reversal zone, spelled out by price since last week. We had incredible conflict on oil between multiple time frames. Buyers were incredibly weak. I've taken 2 trades, one long, one short, and this is the example. Those of you guys who were in the room, watch that happen. While I was taking long trade on S&P, oil reversed. I'm only human. If I concentrate on trading S&P, I am not trading oil. And guess what? The end of the major trend reversal zone where oil staged endless corrections and finally picked up this steam, I expect selling pressure from this level. And the power of this selling pressure will determine the continuation of the trend. And again, nothing had been touched on oil since September 2nd. And the levels continue playing out, showing you know what not to enter into. Do not ever enter into reversal zone. Price will either do a correction or price will do a reversal. After endless corrections, price had finally reversed. And that's oil hourly, and that is our guiding light for day trading. Very big difference between position trading versus day trading. So what is Fibonacci and why do I love what I do? I love what I do because it confirms that nothing in this world is random. I love Fibonacci because it confirms that everything preset in price far in advance. The same beautiful symmetry you see in flowers. When a flower grows, when it goes from very, very small bulb into spectacular, magnificent bloom that eventually collapses, happens with price. It's exact same formula. When you look at human body, when you look in the mirror, why is it so perfectly symmetrical? What determines that? Same formula. How can you not be spiritual if you look around and see how beautiful everything is and what it is a magic that created by God that if only you play by the rules and respect the rules, you would know extremely well that price collapses just like flower when it bloomed to its ultimate potential. And that's exactly what I use for profit targets, and that's exactly what I use for support and resistance levels that identify this critical trend reversal and trend inception levels. Just like I spelled out since 2009, S&P got plenty of juice to go far in advance. And kudos to you if you're an options trader and you knew the method since 2009. You've been long forever. And if you're trading options, it's been 5 minutes worth of work. I'm not an options trader. I'm very, very simple girl with very, very simple brain. Options are overwhelming for me. And I believe that's the best way to trade. I believe if I have to count more than 4, I become overwhelmed. And it's very, very sad story because when I look on options grid, I become overwhelmed. I just need to place entry, stop, target, and be done. And price is telling us there is still space to go. It was so funny before I left on vacation in early August. I said, I guarantee you 2000 will be broken when I'm gone. This is very old post. And as you could see, where is the price now? That's simple. No indicator will ever tell you that. So how is Fibonacci calculated? This is a magic formula, and this is how flower expands, and this is how price expands with exact same sequence. Each number in the Fibonacci sequence is the sum of the previous 2. and it keeps expanding. And if the inception of the trend determined by power, the explosion will be enormous. And if the inception of the trend determined by weakness, you don't want any part of that. You don't want to trade the weakness. You only want to trade the strength. And that's the focus. And that's all I teach. Separate strength from weakness. Walk away when markets are weak, when markets in correction. Trade when market gives you power. In a nutshell, here's the method. This is all I teach. I just finished the class that I was teaching to students at 12:30 EST. Simple. Here's the magic formula. Trade wave 1, wave 3. Do not ever trade wave 2 and wave 4. 2 and 4 are corrective, junk. Stay out, or you are caught in a correction. Next, do not ever buy at the end of wave 3. That's it. And if you know exactly precise 4 rules, that's all you play every day. Again, trade wave 1, wave 3, never 2, never 4. Stay out at the end of 3, because there is not always 5, there is always 3. Minor trend consists of 3 waves. Major trend consists of 5. That's it. Simple. No need to make it complicated. It's magnificent. And price continue repeating exact same dance. So, for example, take a look at this silliness. Oh, speaking of the devil, I left all of my levels on, which I don't want to flush from the class. So we're gonna keep going. That is funny. So I apologize. I left all of my educational things turned on. So, as I had shown you on other instruments, let's take a look what has happened today as we were discussing on oil. Shall we? And where is oil currently finding selling pressure? Oil 15-minute chart. The end of the minor trend, oil collapsed. And here is the reversal zone. This is where it's going to get very, very interesting, because reversal zone on 15-minute chart correlates with the end of the minor trend on oil hourly. And again, once formula applied to the inception of the trend, you never have to reapply the levels until price completes the formation. That's it. So, and that's the formula we continue repeating. And that's a dance once again. 1, 2, 3, 4, 5. Stay out. Price reverses. Nasdaq. So this is one of the most critical and most essential components. Price creates ranging markets 80% of the time. 80% of the time, market moves back and forth, back and forth, back and forth. There are very few markets, very low liquidity markets, such as DAX, especially. If you listen to audio testimonial of a fabulous DAX trader who came to visit me in California, Magnificent Catherine, who only trades DAX. Oil's got nothing on DAX. Oil is 3 times as slow and 3 times as less expensive. DAX does not do this much because it's extremely easily manipulated. This is typical structure of bonds, S&P, and all the other markets that have serious liquidity. And this is where a trader that does not understand that 80% of the time you have to respect small targets, and trader goes for phenomenal targets, gets in trouble. Because that formula is what determines ultimate extension and how far the price will go. And if the inception of the trend is very weak, price does not have much space to go. Take a look at this structure. This was brutal. Ultimate flopacino, ultimate chappuccino. Guess what? Would you like to see how price would determine that? Far in advance? Price told us that's where the collapse will be. Take a look. How magnificent and simple is that? All the students knew where reversal zone will be. Price did not have any potential here. There was nowhere to go but down. Make sense? Until this happened. And that remains the key. You can go for exponential targets if reversal zone is here. It ain't gonna happen. This is essential. Know what not to enter into and where to monitor for reversals. And once that is completed, then you're looking if trend became stronger and take powerful inception of the trend. And when trend becomes strong, which it had done on S&P on the following day, you write the power. And that's exactly what S&P had done. Very, very beautifully. And we had taken the advantage of that on Friday. It was quite a spectacular rally. That simple. But every single rally and every single trend has the end. And this is an example of standard Fibonacci levels. What I teach in the course are levels I developed, not the levels you see on this example. This is just very, very general and what is used as typical Fibonacci level. So here's the power and here's the key. Wave 3, alpha pattern, always present. Doesn't matter if trend is minor, doesn't matter if trend is major. If trend is minor, the trend ends here. But this is the key. If trader enters at the end of wave 3, you are in serious trouble. You are entering into the brick wall. It becomes very, very late point of entry. Prudent trader simply walks away from computer and waits for pullback, not very late and very aggressive entry, which here became a losing trade. Trader takes inception of the trend, wave 1, stays out of wave 2, enjoys wave 3, stay out here. You entering at the end of the trend. Simple. Exact same formula applies to the downside. Nothing different. Pay attention to what happens here. Bad idea. Know when not to trade. The moment trader recognizes 30 to 40% of the time you have to stay out of the markets completely versus entering into brick walls or trading corrective markets, your trading goes to the next level. We'll go over a few examples and I look forward answering your questions. Here's an example so you could see it's all the same formula. Euro, magnificent rally. Euro 3 minutes, exact same formula as you saw on Euro daily. Except here it's a rally to the upside. If you knew the rules, you could have bought at the inception or inception 3. And this is example how late and how dangerous this is. And here is very, very cumbersome and very crooked oil. as oil extremely easily manipulated and has very funky formations. Liquidity of oil is 30 to 40 times less than S&P. 50 contracts get thrown in the markets and oil moves. 5,000 contracts to more needs to be placed on S&P in order for S&P to move. So why in the world would beginner trader ever touch oil? Beginner trader needs to master S&P and double account before he will ever go to such dangerous instrument as oil. Unless beginner trader, of course, trades Google. Stocks are marvelous, especially the ones that are incredibly liquid. More liquid the instrument, safer it is. Here is Google. Clean, classic, everything I mentioned to you earlier. Enjoy the ride at 1, stay out of 2, take inception of 3. Magic. Here trader gotten a little bit lucky, got tiny bit more. The end of 5. Bad idea. Not prudent trading. Best thing to do is not to trade at these levels. So here it is. It's a nutshell. Very simple. In Alpha Wave Trader method, I trade and I teach pure price without any indicators, without any software. We apply Fibonacci for exits. No software, no indicators, any markets, any time frame. In education course, in group education, in basic course, that's what we use. A couple of times a year, I teach advanced course, or last August I was teaching Fibonacci bootcamp where I taught brand new position strategies, which I also teach in private mentoring course only. We concentrated on bonds, on forex, anything from hourly, daily to weekly to 15-minute charts. So again, basic course, pure price with Fibonacci. If you didn't get enough, if you want more education, if you want more strategies, eventually, I don't know when next time I will be offering that, a couple times a year I teach opposite. Fibonacci for entry, price for exits. That's the dance that price continue doing. So, if you're a beginner trader, I just received an email from somebody who is asking me if I start from beginning. I can teach you. If Janice could learn it, which everybody has extremely different abilities to learn, so can you. I would say probably about 5% of the students in the course are beginner trader at different levels. So, if you put your effort into it, if you come to classes, you can learn. In the course, I teach the method. In the course, I do not teach the basics of trading or how to place orders. You need to learn how to operate the platform. We have students who trade on platforms from MT4 to TradeStation to Sierra charts. You are in charge of your platform. You are in charge of order placement. In private mentoring, I log into your computer and I help you and I work with you one-on-one in addition to all the group sessions. At this point, I have only one opening. I devote 1 day a week to mentoring students. So, that's it. That's all that matters. Pure price for entry that defines wave formation, defines wave terminations, gives you high probability entries, high probability targets, and areas of inherent danger. So this is what happens. This is 3 different rooms. By the way, speaking of the devil, I will post a free trading room invitation to the room. You can start logging in tomorrow morning. And in case you will skip this, support will email it to you first thing in the morning. But just to avoid any misunderstanding, Here it is. It's placed in front of you. Do not save the link as a bookmark. Simply click in the morning and log in. And we do have a limited room capacity. So if you're coming in late, you may not be able to get in. Just heads up. So when you sign up for a course, you're joining instantly Alpha Wave Traders Club, where we meet for Fibonacci review before markets open. After Monday trading room, we go into theory classes. Today I was teaching basics of the strategy. So every single day, this is where we meet. After the trading room close, we go into theory class on Monday and Fibonacci class on Friday. And while I'm taking trades, which I do for demonstration of the method in the trading room, where you can see the invitation to, in this room, I discuss the reasons, what and why and when I'm placing the trades here. So again, I'm running 2 trading rooms simultaneously. Once for students with all the discussions, explanations and classes, and one for the visitors. Education room is where all these strategy classes conducted. So as you could see, and all of this is in addition to online manual and modules. So I believe that your trading should be never more than 3 hours a day. Trading room is open 9:30 to 12:30 EST. In education room, you have access to all the course materials, daily live trading, and Fibonacci classes. When you finish the course, you can remain in Alpha Wave Traders Club. We're not going anywhere. And I love the fact when I taught the Fibonacci bootcamp, I reunited with students from 2 years ago. And that's it, traders. This is it in a nutshell. This is all about my method. Again, please don't break my heart and ask about software. I don't sell any software. I teach how to trade price and how to trade Fibonacci. So, let's go into question answer session, shall we? Let's start with what I would like to do. I would like to go into a data feed and I would like to prepare charts for you. So I see a couple of questions for the stocks. I would like to start with futures, forex, and then go to stocks. If Tesla is a major stock, I will have the answer for you. But if it's not, please ask me about major stocks. I see the question above about euro. USD, it's not euro, you mean euro USD. I already answered the question about euro USD daily. This is euro USD daily. Euro USD at reversal zone. It's way too late to short euro. Euro reached all of our targets. Next level on euro is 2700, but based on Alpha Wave Trader method, you do not short at these levels. This is very late short entry. Bad idea. So, alright, long-term gold. Not clear what that means. Let me go to the tools. Gold coming up. Gold I have available. Next question. Let's prepare the charts. Anything else on the futures, please? No other questions on futures? Only gold? Jack, okay, we've looked on ES hourly and ES monthly. You have to tell me the price. You have to tell me the time frame. So let's rock and roll. Let's go to gold, long-term gold. So if you are not specifying the time frame, I will pull it up. ES daily, excellent question. First, let's go on gold. ES daily, everything I will highlight shortly. So let's take a look on gold weekly, shall we? Gold weekly in spectacular downtrend. To short gold at these levels is way too late. I will show you. 1 second, gold coming up. and I will tell you everything I think about gold. All right? So, where was the beautiful area to short gold from? It was right here. The bullish trend, if you were long, you would want to close your profits. Again, this is very, very typical when you start seeing selling pressure not far off from reversal zone. This is what I keep emphasizing to my students. Don't wait for the price to reach this level to a tick. Make sure you are nowhere near this level when you are entering, because sellers are waiting. This is bullish trend exhaustion level. So, let's see where gold is currently and what I think the gold will do next when it comes to the downtrend structure. Gold continue forming very, very powerful selling signals. So, this is what I'm seeing currently on gold. Currently gold at the end of the minor trend, it is showing that it will break through this level. Nevertheless, this is the most important level in the market structure. The end of the minor trend on gold is reached. Gold has potential of sitting at this level for quite some time. It is absolutely essential to monitor the behavior of the instrument at this level. 90% chance oil is breaking through this level and heading until 1225. But it is very first and very critical support level. Just to remind you, this is exact same level where euro struggled on daily for months and a half. Gold showing drastically more powerful selling pressure. Nevertheless, this is the most critical support that is to be respected. In Alpha Wave Trader method on gold weekly, this is first target. 60% of the position is out. Small lot sizes are completely out. This level is broken. Next level 1221, 1225, 1217 and 1180. Gold sellers in charge, except they reached critical support. Knowledge is the key. We may get a bit of a reversal to the upside. So if you're around, let's monitor and let's talk about this. If you're an oil gold trader and you had been short, you want to trail very closely and very carefully. But again, 90% chance it's going drastically lower down eventually. That's the key point, because this is support. Next question, the question was on ES Daily. ES Daily is the chart I review in the room every day. This is ES Daily. This is what I've been projecting on ES Daily forever. I have not touched charts since August. ES had been respecting this very critical support level. And that's where the bounce came from. Buyers are in charge, and buyers showing continuation to the upside, drastically higher, not lower. And this is where the buyers came in from with vengeance. And price spelled out this support level since month of August. So S&P is heading drastically higher. On daily chart, as spelled out by the price, this would be reversal level. Next question. What was the question about? What instrument? Please let me know. Any other questions? Okay, we've gone over multiple time frames on oil, Alan. What other time frame besides the one I had shown? 1 minute. Okay, let's pull up NQ. NQ. So let's do a little education. Why did I stop trading NQ in our day trading room, which is what I started with? This is very, very important thinking. NQ is a spectacular instrument as long as you do not day trade it. Because when you spend $5 for round trip and $5 per tick, it is 5 times more expensive than bonds, which you can trade $3 for round trip, $31 per tick. NQ, fantastic long term, not when it comes to day trading. Here's NQ coming up. USD JPY. Okay, let's wrap up. You know that I don't even, let me see. TF requires special data. I developed my method on TF. I traded nothing but TF for years. I don't even think I have data to TF. When I said goodbye to TF 2 years ago, it breaks my heart to look at it. Because when instrument headquarters move to Atlanta, you don't want to trade it. A couple of times I was in a trading room, there was 1 to 100 lots on TF. There are so many beautiful instruments that trade it in Chicago and New York. Why would trade something that based out of Atlanta? It shows you it's not a good idea. Liquidity in TF is done. Most brokers dropped it. You can't trade serious lot size. It's extremely unpredictable and extremely dangerous. All right, Apple, beautiful question. Coming up. Next question. DDD, no problem. DDD. I don't never looked on DDD. Is that a stock? DuPont? Hello, Dave. This is for you. DuPont? This is what I have. I don't have anything else. I stopped trading stocks since 2008. I used to position trade stocks until 2008. Any other questions on major stocks? Forex, USD JPY, USD JPY coming up. Great questions. USD JPY, any other questions on Forex? And we'll go into discussions. I'm just preparing the data feed to address your questions. CAD. Done. Anything else? Not sure what is AK. My pleasure, Jack. Thank you. Here is my email and my phone number. At any point you would like to send me an email, feel free. TSLA. Okay, I don't believe Tesla is on major data feed. Okay, so let's go into stocks and let's place the questions. Name. INTC. Found it. Done. Tesla, magnificent vehicle. How could he say that his stock is overvalued? Has he lost his mind? My apology, it's not a major stock. TLT. Nope. Any other stocks? Apple, Yahoo, major stocks. I have the data. GILD. Is that the stock? That's the abbreviation for the stock. GILD. Done. Fabulous. Okay, let's rock and roll. Let's go by the tools. The first question was on USD CAD. What time frame, please? USD CAD. What time frame on USD CAD? Daily. USD CAD daily coming up. We'll just go in order of data feed. 1 second. On Ninja, I prefer to use 1440 minutes. It's getting rid of all the junk of the gaps and different data sessions. I need to see everything that's happening in the price. Well, it's quite a spectacular formation on CAD, huh? So, this is CAD. This is where CAD is. So, since the month of May, CAD spelled out where reversal zone will be. This is where CAD had found selling pressure. Lesson number 1. Do not buy CAD anywhere near here. CAD daily, I expect pretty powerful selling pressure overnight today. So please get back to me and let me know what the heck has happened to CAD. The power of that selling pressure will determine if you know what separates correction from reversal, if CAD has enough power to break through this level. Currently it's showing that it has the potential. But the key is the power of the pullback. That's critical. Bottom line is, if you long, you want to take 60% out and you want to adjust your trail. Because the power of the selling pressure is the key. And selling pressure can be quite phenomenal. You may see exact same formations as you saw here and you saw here. And it is not to be ignored. Way too late to buy CAD, no long anywhere near here until after retracement is finished. And retracement may finish here. Pay attention to what price had done. Collapse from the end of the major trend, found buyers where? At the end of the minor trend. How marvelous is price? And if you knew Alpha Wave Trader method in the months of May and June, you knew where these levels are. That's simple. Is that clear? So please keep me posted. I always love hear from you guys. And that's the key. It's spectacular long formation. But the power of the sellers is critical. Next question is USD JPY. Please remind me the time frame. 4 hour. Marvelous. One of my favorite students, Jim, lives in Miami. And Jim is retired and trades Forex 4 hour. When I traded Forex, was my favorite time frame. And honestly, I keep telling myself I will go back to Forex because it's a lot less work. A million times less work. The only problem is not enough sleep and the hours. There is always catch in trading. So this is our extended bullish rally on CAD, 4 hours. Expect a pullback. You can't touch CAD at these levels. Alright? So it's absolutely critical. What I would be doing right now, I can't even touch this structure currently. It is way overextended. It's a phenomenal rally. What I would be doing currently is looking on larger time frame. I would be looking currently on daily. I can tell you right now, I would never touch CAD here until pullback is finished. That is extremely clear. The daily chart is telling me the following. Because price blasted through the levels on 4 hour chart. So this is where CAD is currently. And if you remember in Forex, you always and forever have to add the spread, correct? Marvelous, spectacular. So this is what CAD is telling me. This is the levels on the CAD. Daily, the end of the minor trend 106.63. Based on the spread on Forex, expect spectacular selling pressure at about 106.55, 106.60. The end of the minor trend, add the spread, and keep me posted. The power of the retracement will determine if CAD is powerful enough to continue further up. If this level is broken, CAD is heading to 107.60. But this is first step, because this is the end of the minor trend on daily. Make sense? So once again, please keep me posted, and do not ever forget, trend ends only 20% at decision point 2. Decision point 2, the green line, is the least important level. The very, very annoying magenta color, which I picked magenta on purpose, my favorite shoe color, is right here in front of you and not to be ignored. This is the end of the major trend. Stepping stone. This level is first. Do not buy anywhere near here. That remains the key. It will be pretty interesting session today. Next question is Apple. What time frame on Apple, please? Apple hourly. This is very nasty. Is this accurate? Yuck. What is this? Is that true? Apple hourly? This crazy wicks? Is this accurate? Earning tomorrow, but is this accurate structure? Anybody who's trading Apple hourly, please confirm. Okay, so let's look prior to the earnings what I think about Apple. Not on your charts. 60-minute is not on your charts. Is Apple at 98.48 right now? Sorry? This is very, very peculiar. Let's take a look on Apple Daily and let's see if that makes sense. Yes, it is. Good. That's good news. Let's take a look. Oh my God. That gap is killing me on the stock split. So this is accurate data. Ladies and gentlemen, Apple is heading south, south, south. Absolutely south tomorrow. So, what is price telling me currently? This is where Apple collapsing to next. Again, I'm relying on your Forex traders, stock traders knowledge, because this is pretty insane. So take a look where the buyer stepped in from on Apple. Phenomenal collapse, reversal zone reached. So this is one of the essential components you learn in the course. Know what not to enter into, correct? Is everybody clear? That's absolutely essential and critical. Know when to stay out, know when not to trade. The end of the minor trend on Apple will be 93.56, respect 94. That's Apple Daily. Make sense? So, if you're trading Apple hourly, it has extremely funky range. So let me expand it and let me see. It's very corrective structure. Apple hourly is just not pretty. I can tell you that. Apple hourly is showing that sellers are domineering, and it's very... This is what is giving me a lot of headache on Apple hourly. It doesn't let me expand, it doesn't let me see. Does that make sense? This is very corrective fluff. What you see right here on the chart is not tradable. Last shorting opportunity on Apple was from 100 down. It's still showing the downtrend. Yes, that's what I question. It's very, very funky. So again, if you would take a look on Apple hourly, you would see extremely clearly what that means, right? The reversal zone. That's why I would be relying what Apple is showing to us on daily chart, not on hourly. Okay. Next question is oil. What was the question on oil? I looked on multiple time frames. What time frame would you like me to look at? One minute. Coming up, it's loading data. So if you are asking me about 1 minute chart and what's happening right now, I will show you a couple of trades that played out on oil in the last hour, and I will show you where the markets had ended. All right. This is oil 1 minute. As you can see, every time I apply my tool in exact same way, I just use the formula that shows me that the power of the trend inception determines trend exhaustion. And here's example. Oil 1 minute came to reversal zone and started doing very cumbersome corrective formations and eventually collapsed. Correct? So let's take a look on oil 1 minute and let's see if it's too late to short. This was a magnificent dance oil had done at the end of the minor trend. One tick prior to decision point 2 had found support. I expect oil to revisit this level, and if this level is broken, oil is heading lower down. Clear? That's oil 1 minute. Next question was GC. We already looked on gold, correct? GILD. What time frame on GILD, please? GILD daily. I prefer 1440. Okay, short, as much as you possibly can. I wouldn't be touching GILD long anywhere near here. Sellers are in charge. It's a corrective structure to the upside. My pleasure, Barry. Thank you. So, what are we monitoring on GILD daily? GILD daily. GILD daily, the end of the minor trend, 99.87, 100 level, and next level lower down, 96.35, and all the way to 91. I expect price to find temporary support at this level and continue further down. But again, rules remain the key, and it's essential to monitor price response at this level. That's GILD daily. Next level, INTC. What time frame is INTC, please? Daily. Marvelous. INTC continues its uptrend. It's in a corrective wave too. Do not buy INTC right now. Bad idea. Okay. Wait for a pullback. And this is precisely the reason why. This is the reason why INTC had found sellers. Sellers stepped in, but it was only corrective bearish structure. That's why buyers picked up as soon as they could. I expect another corrective pullback, selling pressure potentially tomorrow, and price would make it to the next level. But currently is not the time to buy. You should have been long already quite a while ago. Currently the time is to wait for a pullback, to finish, and to identify, is this a correction like it was before, or will that be a reversal? If it's a correction, it's a beautiful thing. You will get an opportunity to re-enter. If it's a reversal, it's a bad thing. You don't want to touch that. But this is again a reminder, know your levels. And that's the beauty of Fibonacci. I believe I only have NQ left, and I honestly doubt I have data for TF. NQ daily. Spectacular, marvelous, identical to S&P when it comes to structure. NQ daily will continue its uptrend. It's a bit tired right now, and this is the reason why NQ daily right now is sitting pretty. Tomorrow is extremely important day for NQ. Extremely important day for NQ. This is the same thing. It's showing up on different platforms with different labels. RG. It's exact same thing. On NinjaTrader, this is how it's displayed. Again, it's a brick wall. Monitor for retracement. Do not enter into this level. No problem. TF. On the moment of truth, if there is TF or there isn't. No one asked me about TF in forever. I don't believe there is. Let's see if something had changed at the brokerage. Is this accurate? 1172? Is TF at 1172 right now? I haven't looked on TF in a year or more. It is. Marvelous. Shows you how much I prefer not to look on TF. Okie dokie, TF is drastically different than NQ when it comes to numbers. This is where TF is currently. It's at decision point 2, found support decision point 1. It's very, very cumbersome. It's not pretty. I would wait for a pullback here. So, ideally, the last buying place on NQ is this level. You don't want to buy close to here. So if there is a pullback close to this level and you know the rules, you may have another buying opportunity. Buying anywhere near this is not a good idea. So this is all I have, traders. I believe I answered all of your questions. I'm always open for emails. I'm always open for your comments. And I look forward to seeing you in the trading room. I hope this was extremely helpful. And I hope you enjoyed the webinar. I believe in price. I believe in Fibonacci. And I look forward to hearing from you. Thank you, thank you, thank you so much for your time. Look forward to seeing you. Thank you, traders. Have an amazing afternoon. Any emails, any questions, email me and call me. Thank you so much. Bye-bye. Thank you, Edward. Thank you, Bob. Thank you, Maton, Jack, RG, Ray, Brenda, Alan. Thank you, thank you, thank you. Have an amazing evening. See you tomorrow. Bye-bye.